This is Debra Gruzosky, and she is an enrolled agent and awesome tax professional with H&R Block out of the Chesterton office. And I can attest personally that she's very knowledgeable and does a great job.
Oh, well, thank you. I'm going to tell you a little bit more about myself. I thought it was interesting when you mentioned that you'd been doing your own taxes through college. And I started out, this is actually my 40th tax season with H&R Block. I started when I was in grade school. I started as a young mother, stay-at-home mom who was ready to find something to do in the bleak of the winter, stuck at home with 2 little kids and trying to get through the winter with something extra to do. And I took the H&R Block class, and like you, I thought, you know, I'd been doing my own return, my husband and my return. We had moved, he'd graduated from college, and we moved here after that, and I'd done moving expense and all kinds of things. And I thought, oh, I can do this. I can take this course. I had no idea how much I actually learned. So if any of you are interested in a career, a part-time or full-time career with H&R Block, take their class. You won't believe what you'll learn. There were things I'd never even heard of that I found out when I took that first basic income tax course. We offer our course, and we are in great need for tax professionals. If anybody's interested in a part-time or full-time job during tax season, I would definitely recommend the H&R Block course. They offer it in usually if you go to hrblock.com. July or August, you'll start seeing advertisements for it. And you have an option of online, completely online, virtual, or in class. There's a variety of locations, and the fee is pretty minimal. And I don't know what other H&R Block offices do, but if I hire a student out of one of the classes and they've paid a tuition fee, I reimburse. If they complete the tax season with me, I do reimburse them for their tuition. So keep that in mind. You can go to hrblock.com and get information on it. Like I said, usually about midsummer, and the classes run about 10 weeks, usually about 10 weeks. So that's my little plug for H&R Block. Like I said, this is my 40th season. I'm an enrolled agent, which means that I have taken a test that the IRS gives. It's a 4-part test. I successfully completed that. Several years ago, I think about 15 or 20 years ago. I do have to do continuing education every year to keep that certification. And what it allows me to do is represent people before the IRS. CPAs, enrolled agents, and attorneys have the ability to do that with that credential. So that's something else. H&R Block, once you're hired by them, they provide me the opportunity for all my continuing education through them. So that's a little perk of the job. So enough about me. I'll talk a little bit about, first of all, who has to file a return. Depends on income, on what the IRS defines as gross income. There's some income that doesn't have to be considered when you come up with gross income, such as Social Security benefits. But for students, I'm assuming you are all students. The most common income you would have would be wages, perhaps unemployment income. Somebody mentioned they had some self-employment income. If you are, if you have income as a single person exceeding, for federal tax purposes, $12,400, you're required to file a tax return. Indiana requires a tax return if you have income over $1,000. So very often you may not be required to file a federal return, but you would be required to file an Indiana return if you had any type of part-time job, usually through the summer or after school or something like that. Another point to remember is even if you're not required to file a tax return, you want to look at your income documents and see if you had any federal income tax or state income tax or county income tax withheld and file to get a refund. Because if you're not required to file, they're not going to automatically send you that money unless you file a return to get it back. One of the most frequent mistakes we discover with students is that they're not sure if their parents have claimed them or not, or someone else has claimed them as a dependent. If you're claimed as a dependent on someone else's tax return, you cannot claim yourself on your tax return, except on the Indiana return. And that creates problems for mom and dad or whoever it is that's that you're dependent upon. We will find our clients will come in, the parents come in, we get the parents come in, file their tax return, and then find out when we try to e-file it that it's rejected because their child has gone on TurboTax or one of the free file and filed their tax return and claimed themselves, not realizing what they're doing, not intentionally trying to do anything wrong, but just answering the questions wrong. So you do definitely want to make sure that you are not someone's dependent when you file your tax return. Or if you are, if you are a dependent, just designate on the return that you are claimed as a dependent. Another frequent mistake or error that we find, especially these early months of tax or weeks of tax season, people are very anxious to file and get a refund, and they file their return and they've forgotten some income. A couple of common things would be unemployment. I don't know if anybody is eligible for unemployment benefits. Those statements don't automatically come out. They're not automatically mailed. You have to go online where you filed for your unemployment and print out your unemployment statement. They forget that. They also, a common one is you worked a job in December of 2019, maybe a Christmas job. You got paid for that job in January of 2020. By the time January of 2021 rolls around, you've completely forgotten that you even worked that job, and you have a W-2 that you're going to get that you've forgotten about. So my advice is to really think before you go in and file a tax return, think about everything that's happened to you during the year and make sure you have included all the income that you're required to include. If you make a mistake on your tax return, you do have the option of amending it. Sometimes in your favor, sometimes not, but you still need to amend if you find out you had additional income that wasn't reported. Any questions so far on any of that? On filing, I guess my recommendation is check with your parents. If you are or are not a dependent, make sure you've included all your income. And there's also many good sites for a simple tax return. The IRS has what they call free file. You can go to irs.gov, and I think its income level has to be a relatively simple return with less than $72,000 in income. H&R Block also, they are part of the free file IRS system. You can go to hrblock.com, and they have a way to, I think it's one of the first things that pops up, H&R Block's free file. Any questions on filing a return or? Nope. Let me look at my notes real quick here, make sure I covered everything. Oh, somebody did mention self-employment income. Self-employment income doesn't fall under that $12,000 some dollars. If you have self-employment income, I believe it's $410 or more, you're required to file a tax return for that. So something to be careful of with self-employment income is make sure that you are truly self-employed. Sometimes people will try to pay you as a self-employed individual when in reality you're an employee. So if you're an employee, they should be paying your Social Security and Medicare tax. If you are self-employed, you're responsible to pay your own Social Security and Medicare tax. So just something to watch for. I'm looking at my notes to make sure I've thought of everything. Oh, something that we mentioned before everybody got on the call. Normally, the IRS would start processing tax returns. The original date that we heard about was January 15th. That has been delayed to February 12th, which is very concerning for people that are anxious to get a refund. It doesn't mean that you can't file your return. You can file your return. If we file here through H&R Block, the returns are, we call it stockpiled. They're just stockpiled waiting for the IRS to open up that gate and let all those returns go through. And I believe the free file system works the same way. Excuse me, you can still file, but it's not gonna go anywhere. It's gonna sit there waiting for the IRS to open their gate, we call it, and let the returns go through. The problem with that is that does delay refunds. So normally if on an e-filed return with a direct deposit into your bank account, a refund would normally come in about 7 to 14 days. So now it's going to be 7 to 14 days from February 12th instead of 7 to 14 days from January 15th, which is unfortunate for anyone that's anxious to get their refund. Again, free file is available. You can go through hrblock.com, and you can also go to the irs.gov website for information on that. Should I look at the chat here? Are there questions in chat? Oh, no, just that you want us to mute. Let's see here.
Actually,
how about
there
Cindy?
is one question.
Yeah, look, I see one from Cindy.
Okay.
And let's see. I have a job this year, but I'm a dependent. So if I'm not filing a tax return, does it mean my parents have to file what I earned? That's a really good question, and we get that all the time. And the answer is no. Parents do not include their children's income, their work income, on a tax return. In some cases, that you can make an election if children have what they call unearned or investment income. It can be included on the parent, or the tax can be calculated using the parent's information. But your income from a job is not included on the parent's return, even if you're not required to file. That happens a lot. Parents will come in with their children's W-2s and they think they just include it on theirs, but no. But if you're not required to file a return, remember what I said too, though. Take a look and see if they withheld any federal or state or county income tax, because you can file a return and get that money back. Education credits. Unless there's any other questions, I'll go on to education credits.
Can you just clarify that if she makes enough money, she has to file in claim 0?
Say that again.
For Cindy's question, if she makes over the $12,400 or the $1,000 from Indiana, she will have to file but can't claim herself.
If she is her parent's dependent, that's correct. You do get to claim your exemption on the Indiana return, but if you're your parent's dependent, you do not get to claim your own exemption, but you probably wouldn't have a whole lot of tax in that case, because you still have a standard deduction that's going to wipe out some of that income. It gets a little tricky. It's kind of hard to answer every scenario, because almost every situation is different. If you are ever in doubt as to whether or not you need to file a return, call an H&R Block office. We answer questions all the time, and it's easier to get through to us than it is to get through to the IRS. On education credits, there's a variety of education credits and deductions available, and we have found that it's one of the most frequently missed credits. When we get new clients in, we ask them to bring in prior year returns, and one of the most often missed credit is an education credit, and for a variety of reasons, one of which is people think that because they have paid their education credit, or their education expenses with student loan money, with borrowed money, that they can't claim the credits. You can. you have to pay that money back. You know, student loan, you have to pay it back. So even though you didn't directly pay that money, you paid it with student loan money, you can still claim the education credit. The education credits are claimed by the taxpayer that's claiming the student's dependency. So if you are your parents' dependent or anyone else's dependent and you have education expense, the parents or whoever whoever you are a dependent of is the person that, or the taxpayer that claims the credit, even if they didn't pay the expense. It's kind of unusual. If you've got student loans that are paying your education expense, your parents claim you as a dependent, your parents can claim the education expense if they meet the other criteria, because there are some other criteria. Income, sometimes the credits might be phased out if their income is too high. The most common, or not the most common, the most valuable education credit is the American Opportunity Credit. A credit reduces your actual tax, and the maximum on that is $2,500. It's for the first 4 years of college, or for 4 years of college altogether. You can only claim an American Opportunities Credit on 4 different tax returns. For 4 different tax years, I guess is a better way to say that. They don't have to be consecutive. If you claimed an American Opportunity, or they call it AOC, an AOC credit for 2 years, then took a year off from school and then went back for 2 more years, you can take 2 more years. You do have to be more than half time. There's some other criteria. Again, there are some income limits on that. The lifetime learning credit has a maximum credit of $2,000. It works the same kind of as the American Opportunities Credit, but it doesn't matter what year of school you are in. There's also the tuition and fees deduction. The difference between a deduction and a credit is that a credit offsets your tax liability. A deduction reduces your taxable income. Looks like I have a question here, so I'm gonna look at that. Carl wants to know if the stimulus money was subject to be paid back. We talked a little bit about that before you got on the call. In most cases, no. If you got a stimulus check, the amount of the stimulus was based on the amount of income that was reported on your tax return. If your income is higher this year, which would mean they gave you too much in stimulus, you don't have to give it back. If it's lower, you get more stimulus money. And you know, if your stimulus was reduced, you didn't get the full amount, you'll get a credit and get more. I mentioned before the call started that there were some situations where they issued stimulus money to people that were deceased, and that money was supposed to be paid back. I'm not sure what the criteria or what their ability is going to be to track that. So I'm not sure about that situation. But in a case where you received more stimulus money because your income was lower one year than it is in the current year, you don't have to pay the extra back. Some of the expenses that qualify for the education credits. For the American Opportunities Credit, it's your tuition, it's your fees, course materials, computers, anything that you need to attend the class. The lifetime learning credit, it's the same materials, tuition. The only difference is that the course materials have to be a requirement of the university or the eligible institution, not something that you buy separate. The tuition paid to qualified institutions, the college has to be a college that you're eligible for financial aid, according to the Department of Education. If there's ever, like, sometimes we'll have someone that's attended a small school that we don't know about, we can go on to the Department of Education site, and there's a whole list of every eligible institution for claiming the American Opportunities Credit or the Lifetime Learning Credit. Anybody else have any questions on anything? Another thing that comes up sometimes, that you may have scholarship money that is greater than your expense. In that case, it's possible that you could have taxable income because of that scholarship money. If the school's giving you more money that doesn't have to be paid back, scholarship money, it could create taxable income for you. And then in some cases, since you can't use room and board for the education credits, there are ways of using considering, well, I guess not really room and board, but if you consider, even if you wouldn't normally have taxable scholarship income, there is a way of treating your scholarship as taxable in order to generate an education credit, which sometimes can be to your benefit. That gets a little tricky, and you definitely want to talk to a tax professional to make sure you take advantage of that. But you're including the scholarship in income, but because of the large amount of the credit, it offsets the tax and sometimes can create a refund for you doing it that way. Any money that is withdrawn from a college savings plan cannot be used. You have to reduce your education expense by payments from a college savings plan or anything like that. So it's not a real straightforward, simple calculation. In some cases, it can get a little bit tricky. College savings plans are set up to, if somebody contributes to a college savings plan on your behalf, there's no tax deduction for it on the federal return, but there are what's called, it's the College Choice Plan in Indiana, where there's a very, very generous tax credit on your Indiana return. And as long as you use that money when it's withdrawn to pay for qualified expenses, it's not, the earnings on it are not taxable. The earnings are deferred and then not taxable when you withdraw. Student loan interest is a deduction. It's taken as an adjustment to income. In other words, it's not a credit, but it reduces your income to lower your taxable income, and in that respect, lowering your tax. I do have a few. I'm not sure how good I am here at screen sharing. I'm going to give this a try. Let's see if I can do this. Nope, I can't figure it out. But I have some flyers that H&R Block, some handouts, and I will email those to Rose, and she can distribute those if she wants to. One is on education credits, and one is on financial aid, and one is on college savings funds. So I'll be happy to share those.
So Deborah, if you move your mouse around, you should see the green share screen button at the bottom.
Yeah, I got that, but I can't get to my.
Oh.
I
And then you
can't get
just,
to my,
it should pop open all your documents and you just click on
oh,
whichever
oh,
one
oh,
you
I
want
think
to
you're
share.
right. I think I did find it here. Let me see. Let me see here.
If you just click on application, it should show up.
Here we
Yeah.
go. How
There we go.
about
Yeah.
this? There, hey, thank you.
You're welcome.
Are you seeing it?
Yep, we are.
Okay, yeah. I just couldn't find it. So we have education tax benefits. As you can see on here, it does talks about deductions, tuition and fees deduction. And then it talks about credits. As I mentioned, there are many income level, income limits for the credits. If your income goes beyond those amounts. But something I didn't mention was for parents or anybody that has an IRA, you can, if you have to take money out of an IRA for, and you have tuition expense, you can avoid the early distribution penalty on an IRA. I forgot about that one. Let me see what some of my other ones are here. It goes into a pretty good, talks a little bit about education savings plans. I didn't look over the one. Let me see if I can find it here. As you can see, we have lots and lots of it's not letting me do that one. But we have, oh, here we go. College financial aid planning. Rose probably knows way more about this than I do. But I can send that to you also, if you like. Somebody wants to know the difference between a deduction and a credit. A credit, when you file your tax, when you prepare a tax return, you include all your income, you get some, you get a itemized deductions or a standard deduction based on your filing status, and you subtract those things out, include all your income, take your adjustments, and you end up with what's called your taxable income. Your tax is calculated on that taxable income. When you get a credit, you take the tax that's been calculated and reduce that tax by the credit. For example, let's say that you calculated your tax return, you're down to your taxable income, and you calculate out a $3,000 income tax. If you have a $1,500 lifetime learning credit, now your tax liability is cut in half. It's $1,500, and it's going to make your tax bill lower, considerably lower. A deduction reduces your taxable income. So let's say you have a $3,000 deduction and you're in the 10% tax bracket, you're going to reduce your taxes by $300. So a credit is usually more valuable than a deduction. I don't know, excuse me if I explained that, but a deduction reduces income, a credit reduces tax. Anything else? Anybody else have anything? Here's your opportunity to get your tax questions answered. W-2s are supposed to be out in the mail by the end of January. So if you're waiting to get a W-2, if you have investment income or anything like that, that usually comes later. I mentioned unemployment. You have to go to the unemployment website where you file for your unemployment benefit and print your statement from there. Did anybody get a stimulus? Anybody that's in the group get a stimulus check? Not the most recent one, but the one from last spring.
Yeah.
Yeah.
Okay, when you got that, a few days later, you got a letter from the president. Do you recall that? Getting a letter from that's signed by President Trump for getting that you got the stimulus check? That's actually a form that they want you to use. I didn't realize it. When I got mine, I looked at it and I just tossed it aside. That they want you to use to reconcile when you file your tax return. Do you remember getting that letter? Did you save it by any chance? Anybody? No, yeah. So if you're filing your return in our software here at H&R Block, it asks if that form is present. I thought when I first saw it in our software, I thought that was going to be a form that was sent out like a W-2 or an interest statement or an unemployment statement. But no, they're talking about that letter that you got from the president back in last spring or summer when you got your stimulus check. So I don't know that very many people are going to have that available, not realizing that it was actually a form that they wanted you to save for tax purposes. But the important thing is that you need to make sure when you file your return on the stimulus that you enter exactly what you received, because that can create problems in processing the return or not having an accurate result. The savings plan for Indiana, if you want to let your parents know, or if you're interested in contributing towards a savings account, is called the College Choice. You just make sure to get the Indiana credit, that it's the proper one, because there's all kinds of different 529 plans that you can get. Let me look at my notes and see if I think of anything else that I didn't talk about. The lifetime learning credit, I think I mentioned that the American Opportunity Credit is only, you can only use it for 4 different tax years. Lifetime learning credit you can use as many times as you have expenses. And it's good for graduate school too, where the American Opportunity Credit is only undergraduate. Well, I really don't have too much else. Does anybody else have any questions? On hnrblock.com, they have a pretty good website. They have all kinds of calculators. If you want to go in and estimate what you think your refund's going to be, they have calculators. They have a link for free file, or they have office locators if you want to find an office. We do have a service here that if you think that you may have neglected to claim an education credit or deduction that you're entitled to, or if you think your parents may have neglected to claim one based on finding out learning what you learned today, we do have what's called a second look review. We will review tax returns that are prepared. It can even be at another H&R Block office. We don't care, by a different software or a different H&R Block office or any CPA. We will review the return. We treat the return as if we're preparing it. We interview you just as we normally would our clients. If we have all the income documents, if we find out that there's anything that we disagree with on the return, we explain that, and you can decide, if you want us to fix it or not. And this is free. The reason we can do it for free is because very often we find mistakes that are in the taxpayer's favor, and then they're happy to pay us to amend a tax return and get a little bit more money back or get a refund of some of the tax that they paid. So that is a service that we offer. I already mentioned our tax school, that it's just turned out to be a wonderful career for me. started out as, like I said, interested in a part-time job, and has developed into what I consider a lucrative career. And they do, H&R Block does provide to me all my continuing education and everything that I need, software, everything else. Oh, let's see. Looks like we have a couple of questions. Should I make an IRS account even if I am not filing a return? I guess I don't understand what you mean by an IRS account. If you want to, I'm not sure what you mean about having
I think, Cindy, you don't have, there's not an IRS account, Cindy. It's just when you file your taxes, your information is sent to them. You don't create an account ahead of time like we do other programs.
Yeah. The IRS automatically gets, when you have get a W-2 for a job, or you get a statement from the bank for interest that you earned, or you collected unemployment, the IRS is automatically notified by your employer or the unemployment office or the bank. All of that data is sent to the IRS, and they have that in their system. And if you don't file a return based on what's been sent to them, you may get a notice or something. So you may kind of have an IRS account, even though you may have one that you don't even know about because of the income reporting requirements of employers. Let's see. Someone says they want. Can I talk about the standard deduction? Standard deduction is a dollar amount based on your filing status and your age. Like I said, for a single person under the age of 65, the standard deduction is $12,400. That means that you can earn or have taxable gross income of up to $12,400 and have no tax on that. It's a deduction against your income that's included for tax purposes. Those amounts go up like I said, based on your age and your filing status. If you're married, filing jointly, you get double that, whatever that would be, 20, I can't do math in my head, 24/8. I don't memorize those amounts, as you can tell, because they change every year. They're increased usually because of the cost of living. They go up a little bit. So I tend to not memorize them. You do get an additional amount if you're 65 or older, and you get an additional amount if you are considered legally blind. You get to claim that standard deduction against your income, or you can claim what's called itemized deductions, and you get to claim against your income whichever deduction gives you a lower tax, reduces your income more. Itemized deductions are home mortgage interest, property taxes, a percentage of unreimbursed medical, charitable contributions, that type of thing. So you get a choice. You can pick either or. And of course, most people are going to pick whichever gives them the bigger deduction. Let's see, what was the savings plan for graduate students and how many tax years is it good for? The 529 plans, I believe, are good forever. You can use it for graduate school. And I think, I'd have to look this up to be sure, but I believe the beneficiary can be changed on that. If you have a 529 for a college savings plan, for one student designated as the beneficiary, and they are done with their education, the beneficiary can be changed to a sibling or someone else. So as far as I know, I don't think there's any limit on years. Did I answer that? Was that the question? Like, if you put, are you asking if you put money in, do you have to use it by a certain time?
Yeah, that was kind of the question.
That was kind of the question. It also, I do have to clarify that a little bit. It kind of depends on the type of plan, because I think there are some that do have to be, in some cases, there might be a time limit on it. Anybody else? Anything else?
So just to clarify for our students, if they make over $1,000 in Indiana, they have to file an Indiana state return. And if they make over $12,400, they have to file a federal return. Or if they have money taken out of their paychecks for federal or state taxes and want that back and are under those limits, then it's in their best interest to file.
Yeah, I do need to clarify one thing on that. If they are their parents, if they are dependent of someone else, that 12,400 is lower.
Oh, okay.
It is earned income plus $350. So you need to be careful on that. You may be required to file if you're a dependent. You don't get the full 12,400.
Okay.
Okay.
So at what point do they have to file then?
Let me get I'm gonna pull that up. Hold on just a second. Remember my password. Okay, let's see. If they have, first of all, if you have $1,100 of what's considered unearned income and you're a dependent, unearned income is like investment income.
Would scholarships count towards that? That exceed their cost of attendance?
That's a good question. Yes, I think it would. I'm having a hard time finding this. Here. Okay, so for a dependent, the filing requirement is the greater of $1,100 or earned income plus $350. So let's say you made $5,000 in your job, you'd have to file a return if you earned more than you'd have to file a return if you had $5,350. So yeah, it gets a little tricky on that. You're gonna get a standard deduction up to the amount of your earned income or 12,400, whichever is greater. So if you have anything over your earned income, you may have to file. That I didn't say that very well, did I? If you have more money than the money that you earn from your job, you may have to file a return, even if it's less than 12,400. This is all if you're a dependent. Most kids or most dependents, their earned income allows them to not, the amount of their earned income is enough that they end up not having to file a return, or low enough that they don't have to file a return, except for Indiana, the $1,000.
You have a question, how do I file for a state return since I make over $1,000 as a dependent?
I'm not sure if that, I don't believe you can do that through the free file, but you can do it at the indiana.gov website. Go to in.gov and go to tax, Department of Revenue, and I believe there is a free file there to file it online. I'm not really familiar with these, with those type of sites. You can also print up a form on in.gov, print up an IT-40. It's about 2 pages, and fill that out. Or I think most of the free files, the federal is only the free one, and they charge for an Indiana return. They charge for a state return. But I would go to in.gov, indiana.gov, and go to the Department of Revenue site, and there would be either forms, and I believe there's a free file there to file an Indiana return. And if you, like I said, if you fill out an Indiana return and you're not sure if it's right, stop by an H&R Block office and let them take a look at it. They'll look at it. If you need to bring your income documents with you so they can verify, you know, the math and everything, but they'll take a look at it and let you know if it's correct before you send it in. Anything else? If you have any other questions and you want to submit them, my email address is, well, or you could, Rose, you could share that with them, my email address. I'd be happy to answer any questions by email or.
Okay.
Okay.
Well, thank you so much, Deborah, and all of our students for joining us today, and Deborah for sharing all of your expertise. I know it's kind of one of those fields that are so complicated, so.
It's for every rule, there's an exception, I have to say. So when in doubt, call an H&R Block office and ask them.
Yeah.
Or like I said, we will check things for free. You guys are all welcome. Glad to do it, and please feel free to contact our office if you have any questions or send an email or whatever. Happy to help you out. And keep the H&R Block school in mind in the fall if you're looking for a part-time job during school. We've had teachers that work here. We have stay-at-home moms that work here. We've had students that work here. Even if you don't think you're quite ready or don't have the opportunity to take the H&R Block class, the income tax class, we hire college students and high school students for our front desk for clerical and receptionist and that type of work. So there's always employment opportunities at H&R Block, and it's a great part-time job. We always say the best thing about the best thing we like about working for H&R Block is June, July, and August, because in normal years we don't have to work those months. Very flexible schedule. Thank you. I have to sign off because I have another meeting.